The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone. Okay, how you all doing? This is Neil Green on the weekly webinar. Everybody's doing great. Good is good enough. Okay, Neil Green with you on the weekly webinar, just like every Wednesday, talking about the topics of the same week. Okay, in order to try to generate some trades for you, some opportunities, in order for you to take the right trades. So just like every week, this week I'm doing, doing this webinar at 3 o'clock GMT time, 3 o'clock PM GMT time, talking about the events that are taking place this week. And this time we're going to talk about the earnings season, which is about to start in about a week for a month. And I think the earnings season is the best period of time to trade in the stock market, in the US stock market. The earnings season, all the big American corporations and companies that have, shares in the U.S. market, publishing and hand out the report, the earnings season report. And I'm going to teach you exactly what details we want to look at, okay, in order for us to take the right trades. We're going to talk about it. Just want to welcome you guys on GoToWebinar and you guys on Facebook joining us live from the FMFX homepage at Facebook. By the way, guys, you on Facebook, if you would like at any time to join one of our webinars, this is our homepage, fmfx.com. All you have to do is just to go to join our webinars. Let me show you technically how you do it, and then you can join to the webinar through the website itself, and not only through Facebook. And you see, this time we're going to talk about earnings season is getting underway, and next week we're going to talk about the earnings season is pressing forward. So we're going to have two webinars talking about the same topic, which is the earnings season, the reporting season in the United States. Okay, we all good? Can we start? Okay, so let's start. So as I said, if you want to join the next webinars, you can go to the homepage at FMFX. Just click. Let me try to give you an example. Here is today. Click on the webinar itself and register by putting in your first name, last name, and your email address. Of course, it's for free and will always be like that. Okay? Great. Okay, so this is a homepage, fmfx.com. You guys that are trading with us already know the homepage. You guys on Facebook Live, welcome. And this is a weekly webinar, as I said, every Wednesday, 3 o'clock PM GMT time, this time talking about the earnings season. So let's start. If you have any question, guys, on GoToWebinar, you're more than welcome. You have a chat window, you can write me down. I'll try to answer your questions in between. Of course, I'm going to leave some time for Q&A, a Q&A session, questions and answers at the end. You guys on Facebook, just write a comment on the webinar itself, and I'll try to get your questions at the end. I would like to thank you guys for the emails you sent me during the period week. Last time we talked about the NFP. I'm glad to hear you trader that made a lot of money on the NFP itself. It was pretty easy if you knew how to read it and how to combine it with the technical analysis. We talked about it. Okay, and these webinars I'm gonna be recorded. They're gonna be on YouTube. They're gonna stay on the Facebook page. Okay, and let's start. So earnings season preview, first quarter of 2017. Major first quarter earnings reports start this week. Okay, this earnings season will provide information from the month of January, February, and March. So right now on April, okay, from next week for about a month, we're going to get all the reports, all the earning reports of all the big corporations and companies in the United States coming in. And if we know exactly, okay, if you're going to listen in the next few minutes how to read this report and what we're looking at, okay, what we're looking for at the reports, it's going to create a lot of opportunities for us. And if we take advantage of it, of course, we can make some cash in here. This season will last for over a month and end in mid-May. So every day you can go to Nasdaq.com or CNBC or whatever you like to, okay? Check every day the publications of the big companies, of the reports themselves. The reports will be either before the market is open or after, okay? Either before market hours or after. And the reason for that is, you know, the Americans, they don't want to interfere with the market, okay, when it's open. So usually what you're going to see the reaction when the market is open. It's going to be either a gap up or a gap down on the price of the stock. And then we can join the trades and try to make some profit. Now this the season will last for over a month, as I said, and will end in mid-May. Earnings season is considered the best time to trade stocks, as I told you. A lot of opportunities, guys. Traders use the publications in order to receive solid direction, okay? If you know how to read the report, if you know what details to look at, and we're gonna cover it in the next few minutes, okay? You're gonna know exactly where the price of the stock is going, and by that it's going to create great opportunities for you guys. Now, lots of traders trades could be both short and long term. Okay, you can trade for the short term, for the same day, for example, for a few hours, or you can do it for a week, for a two. You can hold a position for a month. Depends on the chart, depends on the situation in the market, depends on the stock itself. Many times trends evolve after specific publications. Now, the first trend that usually forms is the bank trend. Okay, the first reports that we're going to receive are going to be the banks in the United States, which means we can trade on the bank stocks on the MetaTrader, right? Of course, only when the market is open. Just to remind you, the U.S. market is open from 2:30 p.m. GMT time until 9 o'clock in the evening p.m. GMT time. So pay attention wherever you're from to set the clock. Right now, for example, the U.S. market is open for around 2.5 hours already. So just pay attention to the hours in order for you to know exactly when and how to trade. JP Morgan, Wells Fargo, and Citi will publish on Thursday, which is tomorrow. Okay, these three major banks, Citibank, Wells Fargo, and JP Morgan, are going to publish tomorrow the reports. The day after, on Friday, you're going to see the reaction in the market. Now, Goldman Sachs and Bank of America could react to the publication. Why is this important? Because Goldman Sachs and Bank of America will report on Tuesday, which is 5 days after JP Morgan, Wells Fargo, and Citi. And why is this important? You have to understand that all the US banks, okay, have a very, very high correlation between them. Most of them are domestic. They have business only in the United States of America, okay? And they react the same way. For example, if interest rate, just like we saw, is going up, okay, if interest rate by the Fed, okay, if Janet Yellen and the American Fed have decided to raise interest rate, if we see a hike in interest rate, okay, right now it's 1%, it was 0.75, 0.5, and so on. You can listen to past webinars, we talked about it. What do you think will happen to the banks? Okay, the banks, okay, of course they're going to make more profit, because if interest rate goes up, it means the banks give out loans, mortgages, whatever. They make money over the loans. Okay, the interest rate is the price of money. If I sell money as a bank for a higher interest rate, of course my profits, my income is going to be much higher, and the opposite. Okay, so very, very high correlation. If we know where these three are going, it's going to be very helpful for us to trade on Goldman Sachs and Bank of America 5 days after when they report. Traders should diversify their portfolio using all major bank stocks. Now this is important, not only with the bank stocks, and not only during the earnings season, but in general. Okay, I would like to recommend you guys to split the risk, not put all the eggs in one basket. Don't trade only on one bank stock and go with it all the way, but diversify the portfolio, which means put a few trades, take a few stocks on each one, okay? In order for you, you know that even if one of the stocks won't go the same way, you still have the other positions that are winning positions and making money for you. Major US banks are trading near all-time highs. Let me show you. Let's open the MetaTrader. And let me show you. Well, let's open a weekly chart, which means that each candle represents 1 week. 1 week. I'm sorry, and let's go to Bank of America. See, Bank of America right now is traded. Let's go live. All times high. You see? Great. Now look at the chart. Okay, of course, a green candle means from the election since Trump was elected, everything went, all the stock market and everything went up because of many reasons. We talked about it in past webinars, but this is Bank of America. This is Citigroup. Looks almost the same, all times high. Goldman Sachs. Look at all the bank stocks, all times high. Okay, see, there was a resistance line here and it crossed it. And what else? Let's take a look on JP Morgan, for example. Same thing, all times high. So very, very high correlation between them. So if I know, okay, where one of them is going, I have a lot of information about the other stock. Great. Back to the PowerPoint. So we said traders should diversify and so on. Major US banks are trading near all-time high. I just showed you. P/E ratio per sector. Okay, what you should look at. Let me try to teach you. Okay. We have traders that are more conservative, which means they don't mind to not make a big profit, but they don't want to risk a lot. Of course, you can always use a stop loss. It's important in order for you to decide how much money you're willing to risk. But just in order, you know, to be fair, you can be more conservative or more volatile if you look for bigger profits, but you're willing to take bigger risks. Okay, just in general. Now, looking at stocks, I just went here to Google. Google Finance. Let me show you something. This is CNBC, Google Finance. Okay, on Google Finance, look at something. This is Citigroup, for example. All right, right now it's traded. You see, it's around $58.5 per stock. You see, the prices are changing because the U.S. market right now is open. So we're talking about $58 per stock. Now, the market capitalization is the total value of a company in the stock market. Okay, how much, in this case, Citigroup worth. It is generally calculated by multiplying the shares outstanding by the current share price. So if I take the share price, which is $58.5, and I multiply it by the number of shares, which is 2.76 billion, a bit more than 2.76 billion dollars, I should get how much? I should get this number, $161 billion, which is how much Citigroup worth, right? A lot of money. Okay, let me calculate it for you. I do 58.5, the price of the stock, multiply by the number of shares. They have 2.76, around 2.76 billion, and I'm getting $161 billion, which this is the market cap. This is how much, in this case, Citigroup worth. Okay, great. Number of shares outstanding. This is the number of shares. And EPS is the earning per share. The net income, okay, over the last 4 quarters, the EPS here is calculated annually, yearly. So we're talking about 4 reports, right? The earnings season is each quarter, every 3 months. We have 4 quarters in a year. So this is a yearly EPS. This is the EPS of the whole year. The net income over the last 4 quarters divided by the shares outstanding. So if I take the whole income of Citigroup, okay, take the income of Citigroup and divide it, okay, divided by the number of shares, which is, we said 2.76 billion, a bit more than that, I'm going to get the EPS. If I want to know how much money Citigroup made in the past year, I'm taking the number of shares, 2.76 billion, multiply by how much money would I make if I had only 1 share, the EPS, the earning per share in a year. So we're talking about $13 billion, okay? $13 billion, this is how much money Citigroup made in the past year based on the last 4 quarters, last 4 reports, okay? So you're learning something here. Okay, now, what I wanted to show you is the most important thing is the P/E ratio. The P/E ratio is the share price divided by the earning per share. Now, the P/E ratio, actually the number that I get here, how do I do it? The share price, okay, 58.5 in this case, divided by the number of shares. Okay, I'm going to get the EP ratio, which means PE ratio. So the PE ratio tells me how many years will it take the company, in this case it's a bank, right, Citigroup, the whole group, to earn its capacity back, which means if they make around a bit more than $13 billion a year, multiply by 12.38, which is the P ratio, I should get the market cap, which is $161 billion. See how all these numbers connect? Now, why the P ratio is important? Why should I care how many years will it take the bank in this case, or any other company that you want to trade on during the earnings season? Why do I care how many years will it take them to earn their capacity back? So let me teach you. Okay, this is why we're here. It's important because if I'm more of a volatile risk lover, I like to make very high profits, a lot of leverage trader, I want to look for a higher PE ratio on the same market cap, higher PE ratio, okay? If I'm more of a conservative trader, which means I don't mind to make less profit, but I don't want to risk a lot, I want to look for a lower PE ratio, which means that the volatility should be a bit lower, okay? So these are the numbers. You can find it on any financial, I just went Google Finance, but any financial site. These are the numbers that shows us what's going on in the company, okay? Now, are we good so far? By the way, if you have any questions, you guys on Facebook, you can just write a comment and I'll try to answer. Okay, during the webinar, you can do it now. Now, the PE ratio per sector, we talked about it. Conservative versus volatile, we said. A low PE ratio for the same market cap, I'm more of a conservative trader. Higher one, more volatile, okay? Stock and index. For example, we said, what do we look at? We looked at the Citi. Let's go to Citigroup. See, you go to Citi here. Citi is traded at New York Stock Exchange, whatever. You can look at the NASDAQ. What do? You see NASDAQ, you go down here to the indices. NASDAQ is traded 24/5. Let's take a look at daily chart of NASDAQ, which means that each candle that you see here represent 1 day, right? Good. Let's make it a big. Okay. Now, if NASDAQ, okay, if you see the same day, you see a big red candle, it means that NASDAQ represents the 100 companies with the highest value in the US market. Okay, if you look at the NASDAQ or the S&P, you're going to see almost, or the Dow Jones, you're going to see the same thing. It's all the US market. Okay, if we see, okay, if you look at the NASDAQ and you see a red candle before the market is open, so you understand that generally right now the stock market is going down, and it's one of the things, major things that affects the stock itself when the US market is open at 2:30 p.m. GMT time. Okay, this is important. Why? Because let's take an example. If we had a good report and then the market opens, we said the report are either before or after market opens. So then the market opens, for example, with a gap up, and I look at the NASDAQ at the same day and I see that even before the US market was open, I look at the future contract and I see that NASDAQ is going down and it's on a resistance line or whatever, it might be a great opportunity for me to sell, and the opposite, okay? If I see a gap down and I see that all the US indices are going up the same day, and I know it before the US market is open because the indices are traded 24/5, I would rather buy, okay? Of course, I mean, you have to look at the report, how bad or how good it was, okay? When we talk about US bank stocks, okay, the most important thing I think you want to look at, I'm going to teach you next webinar how to look at other stocks, technology stocks like Apple, Google, and so on. But when we talk about the first publications, which are the US banks, okay, you want to look basically on the profits they made in the past quarter. I think is the most important thing, the P&L report. So stock and index, EPS number and specifics, of course, the EPS, the earning per share, you look at it quarterly. Okay, this time we're looking at how much money the banks made on January, February, and March. Where you find the EPS, you can go anywhere here. This is Goldman Sachs, for example. Okay, Goldman Sachs last time reported on January 18th. Okay, refreshing the page. Okay, last time was on January 18th, and see, you can do quarterly or annual. Let's go quarterly. Let's try to refresh it again. Okay, so last time was January 18th. You see, this case was Goldman Sachs, another bank, reported fourth quarter of 2016 earnings of $5.08 per share, the earning per share, on January 18, 2017, the last season report. This beat, okay, all the analysts believed that it was going to be 4.82. It was higher than that, and you can see the reaction on the market itself. Now, next time, the EPS for the next report is 5.30. Okay? So we want to see if the actual number on the report beats it or not. Okay? We good? Great. Any questions so far? That's good. Okay, next page. Now, traders should prepare their trading setup per stock, which means support and resistance levels before publication. Okay, we talked about it on the webinar of the technical analysis. Before you take any trade, as a professional trader, you gotta know how to combine the fundamental analysis as we're doing now, reading the numbers, knowing what to look at the report, what is the EPS, what is the P&L report, what do they look for in the future, and so on and so on. Look at the key numbers. For example, on Apple, I want to see how many iPhones they sold compared to the forecast, okay? When I look at banks, I want to see how much money they made, with their P&L, of course, compared to the forecast. So the support and resistance levels will give you a technical look at the chart itself, okay? For example, let's go to the MetaTrader. For example, if I'm looking at Goldman Sachs, all right, daily chart. Let's zoom out. You can see, this is the last line that I put, but you can see there is a resistance line around here, around $255 per share. And right now we have a new support line at around 221. So if we have a good report, okay, I might hold it for a week, 2 or 3 until it's going to hit and put my take profit at around 255. Okay, just to give you an example, let's say I have a small account with $10,000. Okay, if I get a leverage of 20, I can take this price and each stock costs $226. This is the number of stocks, 8 lots, 8.8 lots, which is 884 stocks. If the price is going to go up by $30 per stock, and it might happen, each one is a day, let's say like if there's a good report, 2 or 3 weeks, I can make around $27,000 in 2 weeks, which means around 250, 260% on my account. Great, huh? Okay. Back to the PowerPoint. Market sentiment consider fragile right now. VIX is trading close to critical level of 16. 16 is the VIX is the index of fear, okay? If it's above 16, reflects volatile market, which means if we see VIX, okay, you can find it on the MetaTrader. Just go to the indices, look for the VIX. Before you take any trade on the reporting season, take a look in the VIX and try to understand. You see VIX. Let's look for VIX. Indices supposed to be here. Let's do show all. There you go. If you see that the VIX right now is traded. No, this is, yes, it's traded around 14.7. If you see that it's higher than 16, okay, it means a lot of tension in the market, a lot of volatility. If it's lower than that, it's safer to trade if you're more conservative. So pay attention to the VIX before you take any trade. Of course, combine it with the fundamental analysis of the stock itself. And of course, good luck. Guys, any questions? I hope I was helpful. Anything you would like to ask me, you would like me to comment, you would like. Of course, this webinar is gonna stay for you, okay, on the homepage of of our website FMFX. If you have any questions, this is the time to ask. Of course, you can always contact your account managers and to get some more information. I was just trying to be more general to give you the bigger picture. Okay, and all right. Okay, guys, so I'm going to be here next Wednesday, okay, same time, 3 p.m. GMT time. As I showed you, you can register through the FMFX homepage to the next webinar through GoToWebinar. If you want to join us through Facebook, more than welcome. And you can contact your account managers and make some money, all right? This earnings season is going to start in this coming Thursday until mid-May. A lot of opportunities. Pay attention to when each company reports. And I wish you best of luck and have a great one. Thank you very much for participating. Bye-bye.